Hi, this is Anthony. Welcome back to my show. Remember, this is not financial advice nor stock analysis. Just somebody interested in the stock market and personal finance that's looking at this for my own use. And so today's video is about monthly paying dividend stocks. I asked, I think, Google AI to come up with a list of stocks that trade on American exchanges that pay monthly. It came up with 10, and so we're going to be looking at those today. Very quickly, this is just to put them on your radar, and sometimes you put them on the radar to avoid, not necessarily to buy. But you can't make a decision unless you know about them, do some study. Remember, do your own research. Do deep research into these if you're interested. Don't base anything on just what I say or anyone else on the internet says. So the first one, a lot of people know this one. It's Realty Income Corp, stock symbol O. Okay, so there's one day. We're just going to go through this real quickly. 5 days, it's up, down 1% over the past month. 6 months, up almost 5%, a little over 14% year to date. 52 weeks, it's down a couple percent, which is kind of odd, but 5 years, you are up 7%, just barely. Of course, it's paying dividends, 5.39% dividend at this point. And if you would have bought back in 1994, quite a long time ago, and held, you'd be up 800 or 618%, which if you compared that to something like the S&P 500, you might not have beaten the overall market. Anyway, it's not the worst thing in the world there. I don't know if I've ever owned any of this. There may have been one point where I owned 1 share or 3 shares. I can't remember. But at this point, probably not as interested. Okay. STAG Industrial Incorporated, stock symbol STAG. I don't know if this will turn white eventually. 5 days, it's up. 1 month, it's up 10%. Remember, I think on the previous one, 1 month they were down. 6 months, up 17%. Year to date, 17%. 1 year, up only 3%. That's pretty anemic compared to the overall stock market. Whether you're looking at the S&P 500, NASDAQ, Dow Jones Industrial Average. Now, you are making a 3.86% dividend, which at this point in history is pretty healthy dividend. 5 years, you're up only 24%. That's about 4% growth per year. And then Max, going back to 2011, up only 215%. Not really great. Okay. Main Street Capital Corp. A lot of people invested in this. One day it's down a little bit over 5 days. 1 month, you're down almost 10%. 6 months, you're up a little over 5%. Year to date, you're down 3%. Remember, if you can just put your money in QQQM or VOO or VOOG and make more money and make a smaller dividend long term, don't fall for the novelty of getting paid dividends every month when your net asset value is decreasing. 1 year, you're up 10%. 5 years, you're up a very healthy 109% there. And Max, you're up 283. But most of the, climb, if you would have bought back here, sold up there. Okay. And I will have a list in the show notes of all of these, so you can research them on your own. AGNC, I did a separate video about this recently, I believe. Okay. 1 day, it's up 1%, up 2% over a week, 3.66 over 1 month, 13% 6 months, almost 10% year to date. Past 52 weeks up, pretty anemic, 5.81%. 5 years, you're down almost 27%, although you're making, according to this, a 14.12% dividend. And you're down, if you would have bought at the IPO for about $20 a share, you'd be down almost 50%. Okay. Armour Residential REIT, Real Estate Investment Trust, as you know. This one's paying 17.55%. Usually that's not super sustainable. Had a big jump up in the past 5 days, so you're up almost 5%. 1 month, you're up almost 12%. 6 months, you're down just a bit. You're down a penny. Year to date, you're down $2.50. Past 52 weeks, you're down 14%. Over the past 5 years, you're down 65%. And max, you're down 95.5%. I would probably avoid that, but I'm sure that there's a lot of people who ignore the net asset value erosion, the price erosion going down, because they think that they're going to perpetually get this high dividend yield. Okay, let's look at our next one. LTC Properties. 1 day up 14 cents, 3 cents up in 5 days. In 1 month, you're down almost $1. 6 months, you're down 14 cents, pretty flat year to date. You're up, 3.85% compared to anything else in the stock market this year. This is not a good number. The dividend yield, and remember this is per year, not per month, is 6.45%. 1 year you're down 60 cents. Over the past 5 years you're up only 7%. Not very good. And max, you are up since 1992, which, I mean, being up 253% is pretty good if it's, the last few years. This is back to 1992. It's 35 years ago. I mean, that's pretty pathetic there. I would probably avoid that. But again, do your own research. Don't do anything based on what I say. EPR properties down $0.50. Almost $1 in 5 days. 1 month, you're down over $3.50. In 6 months, you're up 8.54%. It's currently paying a 6.58% dividend yield. Of course, that's based on the closing price of the previous trading day. Year to date, you're up 22%. That's, pretty healthy increase, plus your dividend yield that you're getting. The past 52 weeks, up 14%. 5 years, you're up 125%. So that's, roughly 25% per year gain. And max, again, going back to 1997, 175% sounds like a lot, but when you go back that far, 30 years, not a really great rate of return. Okay, next one, APLE Hospitality Real Estate Investment Trust. Again, not related at all to Apple computers. In the past day, you're up 1.5 cents, down 3 cents over the week. 1 month, you're down 2.83%. About the same for 6 months. Year to date, you're down almost 23%. Same thing for 1 year. 5 years, you're up only 17.88%. Not really great. The dividend yield is 8.23. And going back to 2015, so about 10 years ago, you would have lost 35% of your money. As far as the price, you would have been making some money here, but it doesn't look really great to me. Gladstone Commercial Group. It seems like at one point, just because I had a little bit of extra money in my Roth IRA, I may have owned 1 or 2 or 3 shares of this. I'm not quite sure. 1 day, you're up a little bit, 5 days, you're down a little bit. 1 month, down almost 6%. 6 months, you're down almost 19%. Year to date, you're down almost 30%. You're making a 10.45% return on the dividend. 1 year, you're down almost 30%. 5 years, you're down about 30%. In max, going back to 2003, so about 22 years, you've lost on average 1% as far as the price is concerned, are making some dividend there. And our last one that we'll look at, Pembina Pipeline Corporation. This is a Canadian company that trades on the New York Stock Exchange. You're down 10 cents on Friday. For 5 days, you're up 23 cents. 1 month, you're down almost 5%. 6 months, you're down 2%. Year to date, so the past almost 11 months, you're up about 2.5%. 1 year, you're down almost 10%. 5 years, you're up 81.75%. And max, you're up 80%. It doesn't show what the yield is here. Put dividend. According to this, it pays quarterly. According to AI, this was on my list of stocks that paid monthly. So I don't know. Let's see what pops up here. One thing to keep in mind, Canadian stocks, the Canadian government generally takes out like 20% tax. If you hold this in a regular account, you can basically write off that tax against your profit, so you pay lower American tax. Most of my money is in a Roth, and so I don't have that benefit when they take a fifth of whatever the dividend is. It's just not available to me. According to this, they do not have any future dividends declared. Which may be inaccurate. Here it shows quarterly dividends that go up and down, waver by a few cents. Anyway, I'm going to end now. Again, do your own research. None of these are necessarily stocks that you should be thinking about buying. There's a lot of risks, but I know a lot of people are interested in them simply because they're dividend investors, and these companies, at least all but one of them, seem to pay monthly dividends. Check out